If you've been following the financial news over the last few days, you've probably already heard about the new ChatGPT fund. Since its creation on March 6, 2023, ChatGPT's dummy fund has shown exceptional performance by achieving a 4.9% gain in just 8 weeks, outperforming the average of the United Kingdom's 10 most popular funds, which collectively decreased in value by 0.8% over the same period. With its remarkable aptitude to address queries and conduct human-like dialogues, ChatGPT has become a sensation around the globe. OpenAI's cutting-edge language model employs sophisticated machine learning methods to generate human-like replies to various inputs. The utilization of ChatGPT is on the rise and is offered at no cost. Recently, the personal finance comparison website Finder used the AI to create a hypothetical fund, with ChatGPT selecting the underlying stocks. After 8 weeks since its launch, the basket of stocks has far outperformed the most popular investment funds in the UK. Under normal circumstances, the AI is programmed not to produce harmful instructions or biased content. Also, getting financial advice and stock-picking tips from ChatGPT usually isn't possible, but the first people have already found ways to work around these limitations. Before we see what stocks the AI selected and how Finder managed to do it, please consider hitting the like and subscribe buttons. Since its existence, the fictional ChatGPT fund has outperformed real funds on 87% of the market days, leading for 34 out of 39 days, with the largest gap occurring on April 4th, where the fund gained 4.7%, while real funds lost 1.9%, resulting in a difference of 6.6%. Finder used ChatGPT to generate a fictional stock portfolio based on investment principles from top-performing funds. Despite receiving 2 warnings that the AI is not designed to provide specific investment advice, they were able to bypass this limitation by framing the task as a theoretical experiment. We asked ChatGPT to create a portfolio of stocks from high-quality businesses with criteria taken from the leading 10 funds it is competing against. These include things like low levels of debt, sustained growth in the past, and assets that generate an advantage of competitors. Based on the given parameters, the AI created the list of 38 stocks presented on screen. For the purpose of this experiment, all stocks were equally weighted. The 38 stocks selected by ChatGPT include the top performers such as Meta, which has increased by almost 30%, Microsoft, which has gone up by 20%, and Intel Corporation, with an increase of nearly 18% so far. In order to have a comprehensive and impactful comparison, the analysts handpicked the top 10 most popular funds in the UK from the trading platform Interactive Investor. The selected funds include those managed by Vanguard, HSBC, and Fidelity, which are now used as benchmarks for evaluating the performance of the AI-generated fund. The fact that these funds are popular indicates that they are highly regarded and trusted by a wide range of investors, making them a reliable benchmark for evaluating the ChatGPT fund performance. Even though a return of 5% in 2 months is impressive, while the established funds made losses on average, 8 weeks is still a relatively short time to draw a definitive conclusion. At this stage, it is impossible to say whether this performance is rather a matter of luck or the actual stock-picking skills of the AI. Also interesting, Finder conducted a survey on whether people trust AI for financial advice. According to the survey, 8% of people have already used the AI for financial advice. Also, the number of users might increase in the future, as 19% of people are open to the idea of using it for financial advice. On the other hand, 35% of people have no interest in using the AI model for financial advice, almost twice the number of those who are open to it. The big question is how bad of an idea using ChatGPT for investing research currently would be. Big funds have increasingly been using AI for years, but the public using a rudimentary AI platform that openly says its data is patchy since September 2021 and lacks the intricacies of market psychology doesn't sound like a good idea. According to Osler, conducting personal research or consulting with a qualified financial advisor is the safe and recommended approach for individual investors. He warned that it is still too early for investors to rely entirely on AI for their financial decisions. However, Osler acknowledged that the democratization of AI is likely to disrupt and revolutionize the financial industry. In its current state, the model is not designed to select stocks and may never be. Moreover, it is necessary to assess how diversified a portfolio proposed by an AI actually is and how it behaves during turbulent market periods. But as humans continue to develop and explore this topic, the capabilities are likely to evolve and so will the potential returns. Long story short, before you take any advice from AI on any topic, question the answers, as there is no guarantee that they will be correct and produce the best possible result. And if you're now wondering what to watch next, have a look at this video on screen I handpicked for you. Anyway, thanks for watching. Like and subscribe.